This is our Forex blog for February 14th, 2011. And one of the first things that we want to do each day is kind of get a feel for how strong or weak each currency is. And I primarily want to trade based on the weekly trend. If the weekly trend of the dollar's up and you start seeing some strength here at 3, I want to trade this against one of the currencies that maybe has one of the weaker weekly trends and also has real-time weakness. So you can see here the euro dollar had peaks of weakness there, the daily and weekly trends down, the monthly trends just barely up. That would have been a good one. Also, the New Zealand's weak on all time frames. Selling the New Zealand dollar and selling the euro dollar is a high probability trade because you're trading in the direction of all the time frame trends for the most part. So looking at the euro dollar, we bring this chart up, and you can see obviously that the Fibonacci area was acting as a major resistance area right here. And once the currency is kind of in a little chop zone, all night Sunday evening and today, it was stuck there, and then it broke down, made a new low. It's also underneath the hourly here. All the time frame trends are down, and obviously this must have been during a news event, but it just collapsed. And usually the lower containment band is a great place to look to get out of the trade. That one, it fell about 60 pips there. In any time you see the statistical strength at or above the dotted 20 line, those trends are very likely to continue. So you wait for a little pullback right here, and most of the time you want to draw your fibs on the swing to get an idea of where your profit target is. But most of the time currencies don't go underneath the lower containment band. So if you did short right here and it kind of stalled right here, you might have got out with a 15 pip or held on for a little bit more. You can see it wasn't as weak as it was before, and anytime it's at or underneath the lower band or above it, if you're buying, and you see it going lower without that much weakness, you might want to get out of the trade there. It pulled back up again, and again didn't have that much strength, and so it was a pretty decent trade again. It went sideways right here without that much weakness, and at that point you probably stopped looking for sells there. If you want to look at the New Zealand dollar, weak New Zealand, strong dollar, and again this one came up to the fib level right here. Market's kind of chopping around, broke down right here. It's underneath the hourly right there. And again, this one didn't fall quite as fast as the euro dollar did. If you did hang on to it down here to this weekly pivot level right here, you probably want to exit your trade. And I probably would not have sold this counter trend move given the fact that there wasn't that much momentum. Looking at other currencies, you can see also we had a very strong CAD. Most of us don't trade the euro CAD, but the euro CAD would have been an extremely good high probability trade. Weak euro, strong CAD, and this is very likely to go down. You can see previous day's low right here. The currency was underneath there, and obviously all the time frame trends are down. Extreme weakness going into Sunday. The market's kind of going sideways. It pulled back up and couldn't get above the previous day's low or the hourly, and when it broke down right here, this is a pretty high probability trade. It fell about 25-30 pips, and you can see there's pretty decent weakness there. You might have also tried to sell the low right here and that didn't work out. You might have lost 5 or 6 pips. The market's kind of drifting up, going sideways. You give it another shot, because notice extreme weakness, not that much weakness last time, but on the way up right there it's losing strength. There wasn't much to begin with, as you can see here. So we scroll forward and you can see just almost no strength at all. So extremely weak currency. Daily, weekly, monthly trends down. A lot of momentum there on Friday. Broke down underneath the lows. This thing could fall another 50 or 100 pips. You never know. The trends, everything's in your favor. So when you go short right here, it starts to inch its way down right here. You can see it's starting to get a little weak. Counter trend buy signal. It's underneath the lower containment band. You might have shorted this thing at the whole number and you've been up 20 pips right there. 20 pips at or below the lower containment band is a pretty decent trade. If it falls like a rock and keeps going, hang in it. But if it kind of stalls right there, you might want to get out of it. See, usually currencies at or underneath the lower band, unless there's minus 20 at the dotted white line up here, extreme weakness. Usually you're going to get reversals. Some of the better trades are once the market has a strong trend and then you get a pullback trade. Shorting it right here is a higher probability trade because the lower band is a potential support area, and underneath there you have this weekly S1 pivot level. When the currencies are underneath there, they're not as likely to continue. Earlier in the night, you can see quite a bit of weakness in the Swiss. The dollar wasn't really that strong during that time. You had a lot of strength here in the CAD. So you could have bought the CAD Swiss last night as well. This is not a pair that most of us trade, or only on occasion. Starting the day off, you can see what's above the hourly. It's kind of going sideways right here. Unfortunately, we had the previous week's high. This is one of the risks of buying right in front of a major resistance area like that. When it gets broken and takes off, sometimes you find 1,500 pip moves, and other times the market has selling there at the resistance. You know, you got into this trade, pulled back a little bit, barely went higher. Notice it made a higher high with less momentum going up than it had on initial breakout. And usually that's a sign that the trend's not going to happen. You usually want markets that start going up to have progressively higher and higher momentum as it makes higher highs and price-wise. In this case, you made a higher high with less strength. This is mild strength to begin with, and this is half of that. So it's very likely not to work. You got to get out with 5-10 pip profit, and just be happy with what you got. You can notice also here after 3 o'clock, the Swiss all of a sudden became really strong. So if you're watching the currency meter, guess what? You want to trade a strong currency. The daily, weekly, monthly is all strong with the CAD. At 3 o'clock, it didn't have a whole lot of strength. It actually had a little bit of weakness. And the Swiss was one of the stronger ones at the time. So at 3 o'clock, the weak euro, strong Swiss, you'd be better off selling the euro Swiss than the other one. And notice, the drop off right here. It just fell 125 pips. And again, anytime you see extreme weakness like this, usually that trend continues. If you're in and out scalper type trader, you might wait for a pullback here and make 5 or 10 pips as it pulls back. It's always riskier to short underneath the lower containment band, but usually you can get away with it if it's right near there, within 20-25 pips of this. If it's more than 25 pips below the lower containment band, you never want to take a trade at it. This one is barely there, 82, and this is the whole number, so that's 18 pips underneath there. But usually when you see extreme weakness like that, the trend's going to continue, and it finally did, and pulled back another 35 pips here. When you see a currency double bottom or triple bottom down there with the momentum disappearing, usually you can find pretty quick, low risk, high probability counter trend moves. And even on a scalping basis, if you can pick up 5 to 15 pips, 1, 2, or 3 times, it really adds up. Let's see what other trades we have. Extremely weak New Zealand here at 4 o'clock. And again, the Swiss was very strong in real time. So the New Zealand Swiss, very likely to fall a lot. It's coming up here to 4 o'clock. It's underneath the lower containment band. You have a little bit of a pullback right here. Tried to go up. Notice more momentum on the way down than the very, very minuscule amounts on the way up. The daily and weekly trends down, I'm sorry. And you go short, and you have a Fibonacci profit target as down here that you're shooting for. Notice it came within a pip of it right here, pretty much right near the lower containment band. There's a weekly pivot level here as well. Pretty decent place to get out, somewhere around here near 35. You're short around 55. That's a 20 pip move. And you might have also shorted this little up move right here. Notice there wasn't a whole lot of strength compared to the weakness. And of course the currency went down one more time and finally found support at these fib targets down here. Pretty strong Australian throughout the night, and the dollar opened up with a lot of weakness, so you could have bought the Australian dollar last night in the Sunday evening. Notice that the price is above the hourly. Obviously it fell today. Didn't leave this running over the weekend. You have a double top right here. Market's kind of consolidating. It finally breaks out over the high. This is a pretty decent place to get in. The last swing up was from here to here, and it gives you an idea of where the Fibonacci profit targets are. Anytime these Fibonacci profit targets are at or near the upper containment band, and anytime they get hit with less than the 20 extreme weakness level, this has about half that. It only has about a 10, which basically means the Australian pairs are going up and the dollar pairs are weak, but not excessively so, not in a way that's almost almost all the time continues. So it's at the likely reversal area. We have a Fibonacci retracement area. At midnight, this flips, to the next day, so that would have shown up right here. You would have known there was a Fibonacci retracement level. Very high probability reversal, and that was good for about 30 pips profit. Now, if you saw this little double bottom right here on a tick chart, you might have went long. Usually, if a market pulls back and it kind of double bottoms within an hour or hour and a half, the markets will resume their previous trend. And you can see it went up with, again, very mediocre strength. Most of us probably would have got out right here when it went sideways and barely made 10 pips there.